Mercedes is actually gonna, I wanted her to talk about this as well. So she's gonna come up and talk about how she got the appointment, because getting on the appointment, that's the game, right? But you can't get into the game if you don't find somebody first, right? So she was really good at it. Somebody she met on Bumble. So she's gonna talk about how she got the appointment. This is the one she was talking about how it was supposed to be a recruit first, and then it ended up being a client appointment. So just being able to maneuver around that conversation. So come up, Mercedes.
So this is the conversation that I started with her. I was just like, hey, how are you? So this is the conversation I had with her. It was just kind of like, hey, how are you? And you can see at some point she's just like, I'm looking to get people for my cottage, but I also want an extra form of income. So I was like, okay, I have an opportunity for you. So I started talking to her about that, and then we exchanged numbers. So after we exchanged numbers, that's when we really got into it. And on this slide up here,
can you go back? Let me just hear. Is there anything interesting in this conversation? I'm looking to get people, blah, blah, blah. I have been told about becoming an insurance agent, but I'm not sure if that is the field I want to be in. So she's been approached before by something. She gave you kind of an objection. And then what did you say here?
I just asked her for her phone number, and I told her I could send her a short video.
Okay, so you got the objection. How did she know you were insurance, by the way?
She didn't.
She just randomly mentioned that.
Yeah. So I told her that I was financial advisor. So I told her in the second after I put the video, I said, okay, I'm like, financial services. So then that's when she was like, okay. So she sent me her number right under there. So she sent me her number right under there. I just blocked it out, but that's when I said it was like financial services.
Okay, so you just sent her you asked for a number, you sent her the video, and then she watched the video and you exchanged numbers.
Yeah.
Okay.
So then we had a conversation, and then I found out over here that she said an IUD, and I didn't know what she was talking about, but she said term life. So it's like, okay, so I started asking questions, like, okay, you got a term life policy through who? And if she was confused on it because she didn't really know much about the policy. So I was just like, okay, term life through who? And then
And that's supposed to be an IUL, not IUL.
yeah. So then that's when I just asked her, I was like, do you have kids? The whole shebang, and just was asking questions. I was just keeping the conversation going. So like, I build like, what is it before? So like, just like asking questions and stuff like that. And then she ended up sending me pictures of her policy. So then I had Tia, of course, go over it with me.
So Mercedes, can I just, I don't know if a lot of people know what Bumble is, and you threw me because I didn't realize they did business, but can you just.
It's a dating app,
Yes.
but they have a business side. So it's on like the business portion where people want to network, they want to connect, people looking for jobs. So this is where I met her.
You threw me when I heard
There's
that.
another Primerica guy in Virginia that's big on that,
Mhm.
Bumble business.
Yeah.
That's how he gets a lot of people.
All right, so yeah, that's your point, Mercedes. So that's how she got the appointment. So you can really find clients anywhere, right? So even if you don't have a market, if you have a will, there's a way, right?
That's
So,
an excellent point, that this is not, that's not even a warm market thing. You literally created that. And that's what it really is about as a business owner. Can you create the work? And you went and did that. So that's awesome.
yeah, awesome. Good job, Mercedes. So I'm going to go over what I saw in the policy and then what I told the client as well. So this is probably not, especially if you're newer, it's not the most exciting training out there. But you want to master your craft, right, before you go into the field. And I learned how to dissect policies through two people, which is Samir during training and then Peter in the field back in the day, right? So my job back in the day was just to keep the kids entertained while Peter closed the clients, right? So while he was closing the clients, that's really how I learned to dissect the policies. And I was able to go out there by myself to do it. So it's really important to show up to trainings, pay attention, and then also during field training to pay attention to your trainer. A lot of people, you don't just do the QA, so you pray and hope that your trainer is going to close the QA for you. You want to go into that QA taking as much knowledge as you can, learning it and really copying and pasting what your trainer does. And if you do that after 5 or 10 appointments, you should be able to be a soloist and be a really good soloist as well, right? So this client, she actually just got this policy in May 20th, 2022. So we caught her at a good time, right? She had a term life as well. I didn't put the term in here. The agent gave her a term, a 20-year term for $93 a month. And then he added an IUL for $200,000 and it was an option B. So if you guys don't know, option A means you only get one, either the cash value or the death benefit. Option B means you get both, right? So she has option B. And right now she's paying $280 a month initially, but the plan premium is $520 a month, which she had no idea. She had no idea that the plan premium was $520 a month. What's really cool is the agent always sells you on the no lapse guarantee, right? So say this policy is not going to lapse if you pay at least $280 a month. But if you just look down, the no lapse guarantee period is only 10 years, right? So even if you pay $280 a month, the guarantee period is not going to lapse for it's only 10 years. So who knows what's going to happen after 10 years, right? So this is the front page of the policy, what you want to look at first. And then the next thing you want to look at is the fees.
Which one was she paying?
280.
Oh, so she was paying the minimum.
Yeah, the minimum, right? So, which means the policy is probably going to lapse soon after, right? So, one of the big things I point out to her right here is an important note regarding the policy maturity, right? It says here in words in the contract that this policy might not mature even if plan premiums are paid due to the fact that the current cost of insurance and interest rates are not guaranteed, right? And all of this. So I pointed this out to the client and then I showed her, okay, this is what it says, and I'm going to show you the exact numbers of what that means, right? So if you go on to the next page, this is how you calculate the fees. I don't know, who in here knows how to calculate these already? Okay, so, okay, so this is how you calculate the fees. So earlier, it says 6% premium charge, right? So that is 6% of how much she's paying in the premium amount, right? So if that was, at this time, I thought she was paying 500 something, so that's $31. Thanks, Thomas. Okay, and then it says right there, maximum monthly expense fee is $5. And then right there, the monthly expense charge is $127, right? A month for all the years. Right, so this is insane because just pointing this out, I'm telling her $127 for fees, right? Our fees for our policy is $75 a year, right? So this is insane. So just calculating these fees on here. So 31 plus $5 and $127. That's $163 just fees that's coming out a month, right? So just the client hearing this, she's already flabbergasted, right? So then after I go over this, I go over, well, inside your IUL, right, there's something called your cost of insurance, right? So your cost of insurance goes up every single year, right? They put it in these numbers where not the average person can calculate this, right? Because it's a lawyer-written contract, but it's actually very easy to calculate, right? So you take the number. So right now, at her age, you always calculate the first number first. So 0.25. And you calculate that per unit, right? So she has 200,000 in coverage, so per unit is 200, right? So multiply it by 200, and that is $50, right? So right now your cost of insurance is $50. That's coming out. But remember the fees that you have, right? You still have $163 in fees. So that's $213. But you're paying $280 in premium. Right? So if you're paying $280 in premium, you minus the cost of insurance and the fees, you have $67 goes into your savings. Right? And one of the questions you should always ask the client, I guess, before going into this is, did you get this policy for life insurance, savings, or both? Right? And she said both. So only 67 is going to her savings. If you go ahead, calculate year 10, cost of insurance is now $112. Still the same fees, $163 in fees. That's $275. Right now, only $5 is going to your cash value. Go to year 15, right? Do the same calculations. And now $69 is taken out of the cash value, right? Because now we're in the negatives, right? So before going into this, on the presentation, there's an IUL presentation where it has this exact same graph. You know, people like seeing graphs. So I go over that and they just don't really believe it. And I'm saying, I tell them, okay, well, I'm going to show you in your policy exactly that it does work like this. I'm hoping it doesn't, right, for your benefit, but usually it does. And then I go over this. Go to year 20, $223 is taken out of the cash value. Right. So I asked the client, what do you think will happen when your cash value is depleted and the cost of insurance is higher than the premium you're paying every month? Right. So at this time, she was like, I think this is something I don't want to have. Right. And I was like, I don't think so either. Right. Because with this plan, literally, you're pouring in all this money, right? Thinking you have life insurance, thinking she was relying on this for her retirement, right? Thinking you have retirement savings as well. What happens like 20 years later, you have no life insurance and nothing for retirement unless you pay a crazy amount a month, right? So this is really where we close the deal is I just read this to her again, right? So they mentioned it twice in your policy. If they mentioned it twice in the policy, it's probably something you should pay attention to, right? So it's that even if premiums are paid, it's possible that this policy may lapse before the death of the insured due to the changes in interest credited to the fixed account strategy, blah, 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 right? All this. So it's basically telling the client, it doesn't matter what you do if the agent is telling you to pay this amount a month, right? You can do everything right, but this policy, the way it's made, is it's still going to lapse on you. So just these policies are out there everywhere. This company actually was the first time I saw this company, right? But if you know your stuff, you just know that all IULs are horrible for clients, right? And just knowing your stuff, knowing how to dissect this, because even the agents that market these products, they don't even know how to dissect these products, right? So it gives you a huge advantage if you know how to market these products. It gives the client the confidence that you know what you're doing. And just knowing this stuff. And what's great is that we go over it during trainings, right? And you don't have to fumble the bag when you're on the appointment, right? It's because you're learning it now. So when you go on the appointment, you're going to kill it with just this information. Hi. Yes, Josh.
Yeah, so sometimes when you break down how long did you say she'd had this?
Oh, she only had this one for a month. So this is actually the first time where she was still in kind of like her free look period.
Oh, nice.
So I told her, I'm going to help you. I told her, like, one of the best benefits you have in switching over to us is that you have me and Mercedes as your representatives, right? So I'll help you write up the letter. I'll help you take care of all of this for you, because that's my job, right? To make it easy on you so you don't have to stress about it.
So like just for my team, I just kind of want to hear your response to it. Sometimes the people that have had this for a while, there's a surrender charge when you're, trying to get out of this.
Right.
And that could be like nerve wracking for a client to mentally deal with. How would you deal with someone that was just kind of a little squirrely? That's our favorite word. In canceling the IUL because of the surrender charge.
Okay, that's a good point. So I always mention that, these policies, the reason they have the surrender charge is they want to keep you trapped in there, right? Because the longer you pay into this policy, the more money you lose, right? Especially in the long run. So let's say you have a bank account, right? And you're putting your money into the bank. You can't even take a loan out, right? When you take a loan out, you have to pay it back with interest. If you pass away, the money doesn't go to your kids, right? And the first 5 years, basically, all your money that you put in there goes towards fees, right? How long would you want to keep your money in that bank?
Not long.
Not long. Why?
because it's not really doing much.
It's not doing much and you're losing your money, right? Now with the compound interest I showed you before, it's not just the money you poured in there that you lose, is what that money could be if you invested it with me as well, right? So wouldn't it be smart to just get out as soon as possible, right? Before you lose even more money here, right? So I'm gonna work really hard on my end to make sure your family is properly protected, right? And any other money that you're saving outside of that, we're gonna invest that for you. So if that money works hard for you, and all these years that you feel like you're losing your money from the surrender charges, I'm gonna get that right back to you anyway.
Awesome. Beautiful. Thank
Yeah, so that's usually what I would say. I don't know if Samir has a better way.
No, I think that you said it, and I'm not done. I want you to go over a couple more things, but I think that you said it perfectly, which is, and the two examples that I used was, if I have a hole in my pocket, right? Am I just gonna keep putting money in, right? If there's a sinking ship, I mean, there's so many different ways to look at it. But here's the thing. So let's say that there is a cash value of 8,000, but you get nothing if you cancel it, right? Which means you don't really have a cash value. It's just kind of tricky. If you cancel it today, you get none of the 8,000. But if you just keep the policy for another 5 years, then all that money will be accessible to you. But the thing is, how much more money do you have to lose to recover the 8? At $3,600 a year, if I stay for another 5 years, I'm putting in another 15, so I don't lose the 8. Now it just doesn't make mathematical sense. So what we say in this, what my line is, you have to cut your losses as soon as possible. You know, you are so lucky we met you after a month. I've seen people I met you after 5 years or 10 years, and there's really nothing that we could do. But you got to cut your losses as soon as possible. Do you have like a summary in terms of what you put her in and what she was paying before, what you're paying now, or do you want to just talk about that?
Yeah, I can talk about it. So what she ended up happening was she said she actually couldn't even afford these, right? So she was like, you know, the guy just kind of oversold her. She felt like it was stretching her way too thin. She can't even afford that. So we able to get her the same coverage, right? With $132 a month, right? And then we're just investing the difference for her. So 20-year term, right? Locks her in. She's a little older. That's all she really needs. And then invested the difference for her. And she's super happy with that because her investments, I tell her, it's not a bill, right? It's something you can add to it. If you have more freedom in your, you know, your current situation and everything. So she's super happy. And, you know, 20 years from now, she's going to be way better off with us than she is with them.
So you gave her a 20-year term?
Yeah.
Okay. So right now she has a policy that will lapse in 10 and it's twice the cost.
Yeah.
You gave her something that's half the cost, but will last twice as long.
Yeah.
It's crazy.
How much you make from something like that?
And investing the difference. That's important.
That's awesome. What are the questions you guys have for Tia?
How much money you make from doing something like that?
You know. So just, okay, so helping a client save money, right? And my, me and Mercedes, we both make money, right? So helping clients save money, they're happy, we're happy, we make, you know, a few $100s, close to $1,000 for this. This appointment was actually really quick, it was like 30 minutes. So within 30 minutes.
Amazing.
Yeah. And what's great is if you help somebody out, they're going to be super thankful and refer you to other people as well, right? So that 30 minutes can put you in a lot of other clients that will send you more referrals and, you know, shoot you into the business.
Did you get referrals from her?
We're working on that. So we actually sat down with her on her lunch break while she was at work. But yeah, we're in communication with her. We're going to recruit her. That's the goal. Any questions or is that all?
Cool.
Thanks, guys.